Hey, and welcome back. Happy investor. This time, a new update on the number of shares I have bought. I promise that. Every time I buy new shares or ETFs, I will try to share that as soon as possible. Of course, all purely for inspiration and not as buying advice. You know that by now. Fortunately, you are one of the more intelligent investors, for which I thank you. Before I show what the new shares are that I have bought, first, a short update on three matters. First, the most fun one perhaps, don't forget, our booklets are available for download on our website, Happy Investor. Also, a free calculation tool, a free book on starting with stocks, and a free book on ETF investing. Completely free. It only costs you some time, and I can guarantee that you will learn a lot from it. Second point, something I don't keep repeating continuously, but because there are many new viewers since actually last summer, I have done a strategic reallocation of my portfolio and increasingly sold off from America and reallocated in Europe and in China. But always, and that is the third point within my long term strategy, namely, I mainly invest in growth stocks. High risk has advantages and disadvantages. Sometimes it turns out well, sometimes not. You need to know there is a certain tendency between growth stocks and value stocks. Inflation is now starting to rise, but especially interest rates are starting to rise. When interest rates start to rise, it is disadvantageous for growth companies. After all, they attract cheap capital to be able to grow themselves. If interest rates rise, it is disadvantageous for growth stocks. I remain steadfast in holding onto my growth stocks. It's also a bit of who I am, how I am. That has advantages and disadvantages. That's why I consciously try to diversify more myself. But over time, in the past 10 years, I have been able to understand more and more of what Warren Buffett does, with an emphasis on understanding. So learning is one thing, but understanding and applying is another thing. Warren Buffett, with the margin principle, or principles of margin of safety in such matters. Now, I continue to apply that, but in my strategy, I consciously maintain a lot of diversification. Yet we do see a bit more focus on certain larger positions. And what I also do is invest quite a bit of money in ETFs. For the future, I have decided to invest 40% in stocks, of which 20% in regular companies, as you might call them, that all must have a moat, and 40% or 20% in serial acquirers. So those are companies that acquire other companies. Buy. Regarding those companies, they must all have a competitive advantage for the long term. And I really want to hold on to it for the long term. But the way I am, occasionally, I might sell a little, buy a little here and there, maybe deviate a bit. That's simply because I find it important that it's enjoyable. And if you do something, you should just enjoy it, because then it also lasts for the long term. The other 60% I will invest in ETFs. And why? My goal was always financial freedom to achieve. I mean, I started investing at 23 just with the monthly contributions. Then I started earning more and more money. I was relatively frugal, still am even now. And yes, then you have a lot of money left over. So the monthly amount just kept increasing more and more. I just kept investing 60K, 80K, 100K. Eventually, became financially free around the age of 30. And financial freedom is a subjective concept. And now I'm 33. And my wealth has grown to the point where I'm satisfied with a 10% return. Good. So keep in mind that everything I do is from my personal perspective, and that immediately means it cannot be copied one to one, and also not to be followed as some form of advice. To follow up is we never give buying advice. Everything you see on YouTube should always be taken with a grain of salt, and especially look at what people do. That is the most important thing. In this update, I'll show you what I've done, which stocks I have bought. I don't know if they are great stocks, although I personally think they are. But, well, you can judge that better for your own strategy. Let's take a look. In the past month, a lot of stocks sold. At least it seems that way. But these stocks we have sold, and I have explicitly mentioned that in the last portfolio update from April. So watch that update if you want to review it completely. And I sold all these stocks because of transferring part of the assets to Maxim. So you see here, there is now about 88,000 in cash. This was only done from the week of April 3rd, 4th. And it's simply selling due to all these higher currency costs at the DEGIRO. And at Maxim, it's much cheaper for stocks in dollars. But the stocks in euros, I still keep them in the DEGIRO account. I also explain, listen, in our links, you will find a special code to Maxim. If you're interested, click on it, and you'll see a €100 cashback. a promotion we have arranged for our members. If you also want to partially switch or just want to do one, I do that myself as well. I still keep the Giro as Euro currency. I'm not going to keep repeating this every time, but many new viewers watch our videos each time, so know this as an update. Well, what we still see are actually still the Euro purchases and the stocks in SEC, which is Sweden. And actually, there, I do need to transfer them to Max, but I'm like, okay, whatever, 0.25% sufficient costs. I accept that part. I just keep them in the Giro account for now. Maybe I'll transfer them later as well. And actually, there are two very large positions at the moment. That's Evolution, which I've already emphasized a lot. We'll talk a little more about that in a moment. And Teqnion. Teqnion has also recently bought some more. Additionally, bought a piece of ETF, both China Internet ETF and uranium. I shared that in a separate video about ETF purchases this month. Watch the video for that. We also see, for example, an Applovin and a Himes and Hewers. I have just one share of that for now, held on to show what the effect can be in terms of profits. And as I already mentioned, yes, I have those. I bought all of them quite some time ago. I want to show you this because I think it's important to provide evidence. And also the power of growth stocks. If you have just a few winners, there's enough, losers included. And you also see my portfolio now showing quite a lot in the red. That is, of course, yes, my portfolio is not immune to the market either. And it's really about having just a few winners for growth stocks. And actually relatively small amounts, as you can see here in Applovin, have led to large profits later. But I sold Applovin at high prices, namely around 460, 442s, and then a bit at 250. Why is that important? Because the current price of Applovin is around 260. So I actually sold almost at the peak, somewhere here. That was a bit of a downturn. And with that, I saved about a 42% loss. That was on an amount of, I'm still waiting for it to go down 20K. 40% of that actually is 8,000 euros in avoided losses. A part of that avoided loss, or however you want to call it, has evaporated because I had purchased Zeta Global Holdings. And look, it's at minus 6,000 euros. So the reverse is also true. If you buy good stocks at the wrong time, but that's always super difficult to determine. And there will always be winners among them and always losers. That's the game. So that's why you should just diversify risks and buy good companies. You don't need to worry. Zeta Global Holdings is simply a fine company. It does marketing, so it's relevant for all sectors. They also have a lot of diversification across many sectors. And in my opinion, they have very strong management. So I'm absolutely not worried. They have healthy growth targets, which they also consistently follow, achieve, and will continue to do so in the long term. But if there's panic in the market, growth stocks will always be extremely volatile. That's it. They even become more exciting. What do we still see in the portfolio in terms of notable positions? Those are actually the serial acquirers that remain. And that is green landscaping. A small position. We see in Stalco, a small position. It was up 20% for me, by the way. I also bought an SEC here and I converted it to euros because of the currency costs. And since then, it has dropped by 12%. My total profit and loss in Stalker is somewhat better. It doesn't really matter. Also for the long term. And I have only recently bought all these stocks because I made a very long transition. So from selling in America to Europe, we see, for example, Evolution. And we need to look at 2023, for example. And I bought Evolution for the first time in the summer of 2024. The stock is at a higher price, $95. If we look since then, it has, of course, only declined. So that's a painful path for when you're, of course, building a larger position. You don't want to see it naturally decline in the long term, but that's long term. And the summer of 2024, that was around this period here. Since then, it has dropped quite a lot, as you can see. Actually, what I've done is just consistently, occasionally buying a little more. The last purchases were around the price level of 72. Even now, it's slightly below that. But Evolution has actually become dirt cheap. It now has a price to earnings ratio of about 12 and high profitability selected for that as well. Evolution also has a moat or a competitive advantage. It is in a not so beloved sector. You can also have criticism regarding ethical objections. But aside from that, and also some regulatory uncertainties, the price to earnings has now dropped to around 11 to 12. Dividend or yield has increased to 4%. That's not why I'm in it. Only the normal multiple for such a company is actually very high, around 30. If you were to maintain a price to earnings ratio of 15 and the profit growth estimates below are realized, and they look very realistic, then Evolution could achieve an average return of 23% from this price level. So what is the whole problem with Evolution? They are in a sector with a part of their revenue, and thus profit possibly derived from unregulated markets for casinos. And that is indeed a concerning point. So also, recently there was some news about investigations into Evolution. In other words, acting according to the guidelines. And actually, it was all bad news, on bad news, on bad news, on bad news. And it just keeps going on. And in the meantime, I just keep buying. I think it's all not super relevant. Of all the companies, with stocks, Evolution is in the top 5 that I understand the most. But this is all personal, how I view it. And for me, it's really a long-term holding. More importantly, actually, is that the value is 25,000. Loss is 5,000. So in total, 30,000. My total portfolio is just under 350. And I want to invest a maximum of 10% in one stock. I can possibly buy an additional 5,000 euros. I'm still very cautious about that. I'd rather not do it. And Evolution will soon also pay out dividends. So I'll get 4%. What is that? About 1,000 or a little more. So then I can reinvest that portion of the dividend. The last transaction was quite a while ago. Let's take a look at the most recent transactions. This includes Teqnion, only for the past month. And that's what I'm going to share in this update. I had already bought the largest positions of Teqnion at a lower price. I'll show it anyway, maybe you'll find it interesting. So, Teqnion actually bought just after the summer of 2024, but heavily at a higher price. And after that, I bought a little more each time. At lower prices, as we can see here, a batch of 150. This was actually just a single purchase order, only it was spread over multiple purchases. And that was in total, if I see it correctly, about 5,000 euros extra bought. So recently I also bought a little more Teqnion. I've made several videos about it. Super interesting little company, a serial acquirer. And to give you an impression, the market value is now about 250 million. How do 10 baggers or 100 baggers come about? By relatively very small companies that play the long-term game and hopefully get better and better at it, while they also simply let the profits grow. 250 million to 2.5 billion in market value, which is very realistic for a small serial acquirer, means a 10x increase. Will it ever reach 25 billion? Maybe in 30 years? Then my position would be worth about 1.7 million. The only thing I have to do is wait a lot. And maybe I'll get lucky. We'll see. The last purchases were at least from April 10th. It has dropped a little bit again. But still, you do see a slightly higher price than the lowest price I previously paid of 150 SEK. I still have one buy order open for Teqnion at 140. No idea if it will reach that. We'll see. And finally, a little bit of additional buying of the other serial acquirers. Green Landscaping, just a simple company that acquires gardening businesses, so to speak. VTech Software, a somewhat more complex serial acquirer that buys various software companies like CSU, Constellation Software. And finally, SDIP Teqnion, also a serial acquirer. So we mainly see in my portfolio at the moment serial acquirers supplemented with Evolution, and bought a little more. If we then go back to the portfolio, well, the current results are not good. You've seen I got in from the end of 2024, so summer and end of 2024. And of course, my portfolio Stolio is also not immune to recent developments, so that has actually weighed extra heavily. But I'm actually not worried at all. Evolution, largest position so far in terms of shares. I don't see any strange things here. The future returns are likely to be very high. But, well, regulation can always throw a wrench in the works. That's the only thing I think is really a risk for evolution. We see Teqnion here, as I said, it's actually doing quite well, by the way. We see market conditions, and it still remains at about -1% for me at the moment. And it's actually holding up quite strong. Despite the fact that the ETFs have dropped a lot and the indexes, Teqnion remains relatively strong. I explained this in another video as well. They continue to buy, especially now in the UK. They are doing quite well there in terms of returns. So return on equity and things like that. The position is 17,500. If that goes tenfold, it's 170,000. And then I actually have my portfolio, at least all the losses from other stocks taken out. So I'm absolutely not worried about that. And smaller companies like Green Landscaping, which is now at -20%, but they just continue, as you can see, just consistently buying a little more each time, preferably on larger declines. And maybe if it continues to drop further now, and the game changes in the recession, then it's time to deploy large cash reserves and buy a lot more. For example, Green Landscaping is, historically speaking, probably undervalued at the moment. The price to earnings ratio, for instance, has dropped to 11.5. You don't see that happen very often in the history of this small stock, a serial acquirer. If you're talking about just the price to earnings ratio of 15 in combination with the EPS growth, and remember, it is the most beautiful thing about serial acquirers is that their business model is simply focused on buying strategic acquisitions of relatively smaller companies, because this is about holding companies. They purchase relatively smaller companies within their niche strategy for the long term. And in doing so, they create synergy benefits and industry expertise and use a bit of leverage, but not too much to realize these acquisitions. So if you have a portfolio with organic growth and it declines, you can still achieve returns through non-organic growth because you consistently acquire other companies. That's why it's so interesting. But major concern is the interest rate. If interest rates rise, debt becomes more expensive. Serial acquirers like growth companies use relatively a lot of debt, and that is indeed a disadvantage. So let's say the last 10 years, serial acquirers have performed very well, but back then interest rates were continuously dropping. The current interest rate level is not shockingly high for serial acquirers, but it shouldn't get too high, of course. Still, average returns of 40% per year for small serial. Acquirers that drop significantly and become cheaper in valuations is, in my opinion, a good thing. The same goes for example, SDipTech, which is now down significantly in the short term at MIN 22%, and I bought a little more, as you had seen. And we are talking about this here as well. Historically, possibly undervalued. In terms of earnings of 16, 17 it has occurred, around 14 in this last drop, and recently 14.6. Has this happened more often? Yes, actually. In the early stages, it had a lower valuation. But this serial acquirer has proven itself to be doing good business within Europe. And if you look at a small piece of forecasting, and this is never entirely accurate, so you should never copy it one-to-one. But it could, for example, achieve an average return of at least above 10% from this price level, and maybe much more. But the most important thing is really about the long-term growth that these kinds of companies create. So I'm not worried. These are not free results that we are seeing here. But all in all, I'm not worried. Ban. So 90K I've transferred to Maxim, private account. That is actually Maxim plus the Giro is my IV situation. And then I have a business investment account, which is simply money from my holding. And also with that started around early 2024 last year, but very slowly addressing things because I thought the market was overvalued. And then it only takes a trigger like Trump. Yes, that's when these kinds of things happen that you are now experiencing with the market declines. Year to date, the performance is minus 5.7%. That is not good. However, compared to the S&P 500 and the Invesco, Nasdaq or Invesco QQQ, they have dropped by 11 or 13%. So then that minus 6% isn't so very bad. My stocks, by the way, are also performing on average a little worse than that even. Only I have a cash position of 55%, and I still have that. So I remain very patiently waiting because I simply believe that all market conditions, that all of this can lead to more attractive prices in the future, but we will see. Every now and then I still do buy some stocks. Buy. I actually have a number of orders still in the system. Coincidentally, also from serial acquirers. But I actually want to spend the rest of the cash position on ETFs. I am patiently waiting until FitLife Brands, which is a very small acquisition company, or within fitness supplements. An interesting CEO, holds a lot of shares, more than 50%, experience in private equity, knows what he is doing, has a very good track record so far. But I have very small positions in FitLife Brands. And the last one I bought, we see below. On April 4th, I bought an additional 80 shares to account for about $800 or something. And the small position has thereby grown to about 1.6 PA, or $1,700. Number talks of purchase orders created, but no idea if it will ever reach this price. And what we also see are purchase orders for KPG. And I have recently bought a little more of that as well. And this is now the largest position within my business portfolio. And KPG stands for Kelly Partners Group. It is a serial acquirer in accountancy firms and primarily in Australia, but now also a bit more internationally. I think they are doing good business, but we will see. The total return was 40%, but now it is only 11%. So it has dropped significantly. The market value is now 10,000 or 11,000, waist upwards. That's a small plus, but it hasn't dropped much. I had some shares, bought more of KPG, and there is still an open order around 9.3. No idea if it will reach that. We will see. Time will tell. So we watch. The first position was some time ago. That was somewhere here also in the summer. The price is now already from 8, so that should roughly be correct. Then it had risen a lot to about 13. But yes, now it has also dropped again by about 30%. I am very curious because I don't know if you see, but I want more shares here to buy. And also, this is a relatively small company, Kelly Partners Group. It has a market value of about, after this drop, I think $300 million. That is very small. And I think it has a good chance of succeeding to really become a multi-bagger, to become one. So tenfold, maybe, even more than that. Time will tell about Kelly Partners Group. I would leave it at that. Not many other special things to report, except that this is a time to just keep buying. Bad market timing does not exist, as you can see with evolution, particularly bad timing. All in hindsight, of course. It just seemed like a good valuation that I paid around this price level. And you see further, it has only declined. And along the way, the first position has thus decreased by about a little less than, but I think minus 40%. It was somewhere around here that I bought, so a little less. And along the way, of course, just kept buying and buying. And well, yes, you see, the total result is already minus 16%. That is unfortunately can also happen. I'm not the only one if that's the case for you. That's also a bit of the game with investing. Long-term compounding really takes place in the long term. Long term, exorbitant high results and returns only really happen in the long term. This is a company. Everything you see here, this market here with these charts, doesn't really exist. This is Mr. Market. You invest, for example, in Evolution or another company. This is just a real company. There is a management behind it. There are all kinds of people working in that company. And that company simply creates certain results. Evolution, for example, high profit margins, very high EBITDA margin of over 60%, high return on equity over 30%, and the company just continues to steadily build. But there are always risks. Evolution's risk is business-related risks, mainly just regulations, and of course, market values involved, so it can be subject to regulation. So all companies have risks. We look at the individual level. Apart from the market, am I paying a good price now? I was quite content with the initial entry around July at the price of around 1,000. well, it has dropped a lot. I just buy more because I think, yes, in the long term, I'm only buying at a cheaper price for the same company. And in such a short term of what is it, almost a year, a little less, that is far too short for a company to conclude that the fundamentals are becoming less good or actually more good. I actually think, especially if you invest in moat companies, that it only gets better and better. So that's long term compounding. You need patience for that. And I will continue to share every update. If there are relevant updates, I will share them. I will also continue to share new purchases. Maybe you'll find it useful, maybe not. In any case, thank you for your time and effort. And I greatly appreciate that you follow us.